There is a bank rule that has quietly caught thousands of retirees and Social Security recipients completely off guard, not because they did anything dishonest, but because nobody ever explained how it works. And in 2026, with financial systems more automated and more connected than ever before, the chances of being flagged by this rule without realizing it have gone up. So today we are going to walk through exactly what this rule is, who it affects, what triggers it, and most importantly, what you can do right now to make sure your money and your benefits stay protected. Stay with me, because by the end of this, you will understand something that most people your age have never been clearly told. And if content like this is helpful to you, please take a moment to like and subscribe. It helps make sure these explanations reach more people who need them. Let us start with why this matters specifically to you. Someone who may be on Social Security, SSI, SSDI, a pension, or a fixed retirement income. When you are living on a set monthly amount, any disruption to your finances is not just an inconvenience, it is a crisis. A frozen account, an unexpected letter from the IRS, or a question about where your money came from can create stress and confusion that takes months to resolve. And here is the thing. The rule we are talking about today does not target criminals. It does not look at your character or your history. It is an automated system. And automated systems do not know that you are 71 years old, that you have been saving honestly your entire life, or that the money you just deposited came from selling your late husband's truck. All the system sees is a number and a pattern, and if that number or pattern meets a certain threshold, it files a report. Understanding where those thresholds are is how you stay out of the way of something you never intended to step into. Here is how the rule actually works, in plain language. Federal law requires your bank to file a report with a government agency called the Financial Crimes Enforcement Network, FinCEN for short, anytime you deposit more than $10,000 in cash in a single transaction. This report is called a Currency Transaction Report, or CTR. Your bank files it automatically. They do not call you first. They do not ask your permission. They simply file it, and it goes into a federal database. Now, here is the first thing I want you to understand clearly. That report, on its own, is not an accusation. It is not an investigation. It does not mean you are in trouble. Banks file millions of these every single year, and the overwhelming majority go absolutely nowhere. If you sold your car for $12,000 and deposited the cash, a report gets filed, your name goes into a system, and in almost every case, nothing else ever happens. The paperwork is just a record. Here is where things get complicated. And this is the part that has tripped up so many good, honest people. At some point, word spread that if you keep your deposits under $10,000, the bank does not have to file that report. And so, people started doing exactly that. Deposit $9,500 instead of the full amount, split it into two deposits a few days apart. Have your spouse deposit part of it at a different branch. It feels like you are being careful. It feels like you are avoiding unnecessary attention. But what you are actually doing is committing a federal crime called structuring. And structuring carries consequences that are far more serious than the original report ever would have been. The brutal truth is this: it does not matter if the money is completely clean. It does not matter if you earned every dollar of it over 40 years of honest work. The moment you intentionally break up a deposit to stay under that reporting threshold, you have crossed a legal line that federal law takes very seriously. Accounts have been frozen, money has been seized, and almost none of the people it happened to thought they were doing anything wrong. They thought they were being smart. So who does this actually affect? If you are a retiree or a senior, the answer is more people than you would think. Think about the situations that come up in real life. You sell a car, a piece of furniture, or tools out of the garage. Private sale, cash in hand. Your son or daughter wants to help you with medical bills and gives you a significant amount of money. You are moving your savings from one bank to another, and you decide to do it in smaller transfers because big transactions feel overwhelming. You receive an insurance settlement. You close out a certificate of deposit. You collect rent from a tenant in cash over several months. Every one of those situations involves money moving in a way that can interact with this rule. And in each case, the mistake people make is the same one. They try to manage how it looks instead of simply documenting what it is. Let me walk you through what real exposure looks like, because it is almost never dramatic. It is quiet, and it builds. A widow in her late 60s, recently lost her husband, decides to consolidate 30 years of savings from two separate banks into one account. She is grieving and exhausted. She does not want to deal with one large complicated wire transfer, so she moves the money in smaller amounts over a few weeks. $9,000 here, $8,500 there, spread out so it feels manageable. 6 weeks later, she receives a letter asking her to explain the transaction pattern. The bank's automated system did not know she was grieving. It did not know she had been saving honestly her whole life. It saw a repeated pattern of deposits that all landed just under $10,000 over a short period of time, and it flagged exactly what it was designed to flag. That is not a horror story. It was resolved. But it caused weeks of stress and confusion for someone who had done absolutely nothing wrong except make the money look like something it was not. Here is where exposure increases. Repeated deposits that all happen to land just under $10,000 are among the most flagged patterns in the banking system. The threshold is not a secret. The software is specifically designed to look for people who know about the threshold and appear to be avoiding it. $9,800 is not safe. $9,500 is not safe. The pattern of trying to stay under the number is itself what draws attention. Let us also be clear about what is not happening, because there is a lot of misinformation circulating right now, and some of it is genuinely harmful. There is no new law in 2026 that lowers the reporting threshold to $600 for Social Security recipients. That proposal was discussed several years ago and was not passed. The $10,000 threshold for currency transaction reports remains unchanged. Anyone telling you that your Social Security deposits are now being individually reported to the IRS under a new rule is either misinformed or trying to frighten you. Your regular monthly Social Security payment does not trigger this reporting process. What triggers it is large cash transactions above the threshold or patterns that appear designed to avoid the threshold. Protect yourself from this category of misinformation the same way you protect yourself from scam calls. If someone contacts you by phone, by email, or by letter, claiming that your account has been flagged or that you owe money related to a deposit, do not give them any information. The IRS does not initiate contact by phone call. Your bank will contact you in writing through official channels. When in doubt, hang up and call your bank directly using the number on the back of your card. Here is what you actually do to protect yourself, and it is simpler than you might expect. When you have a large amount of cash to deposit, deposit it all at once, the whole amount, in a single transaction. Yes, a report may be filed, that is fine. What protects you is not avoiding the report. It is being able to explain the money clearly with documentation. If you sold something, keep the bill of sale. If someone gave you money as a gift, get a simple signed letter that says who gave it, how much, and on what date. It does not need a notary. It does not need a lawyer. Just a signed, dated piece of paper. If you are moving your own savings between accounts, do it in one wire transfer or cashier's check and keep the confirmation. If the money came from a CD that matured, keep that notice. When a bank teller asks where the funds are coming from, and they may, your answer is one sentence. You tell them where the money came from. You do not elaborate. You do not get nervous and start adding details that were not asked for. One clear answer, supported by the paperwork you have already saved. For caregivers and family members helping an elderly relative manage their finances, this applies to you too. If you are helping consolidate accounts, move savings, or deposit cash on someone's behalf, make sure you understand this rule before you act. A well-meaning family member who splits up a transfer to make it easier has inadvertently created a problem for the person they were trying to help. Move it whole. Document it clearly. Keep the records for at least 3 years. And if you ever receive a written inquiry from your bank or any government agency about a transaction, respond once in writing with your documentation attached. If it escalates beyond a routine question, stop and speak with a CPA or tax attorney before saying anything further. Here is what I want you to carry with you from everything you just heard. This rule was not designed to catch you. It was designed to catch serious financial crime. But the way it is built, automated, pattern-based, without context, means it can surface the transactions of completely honest people who simply did not know how the system reads their behavior. You are not in that position anymore. You know where the line is. You know what crosses it. And you know that the thing that protects you is not avoiding the number. It is being able to explain your money clearly in writing with a paper trail that tells the truth. Your benefits, your savings, and your financial stability are worth protecting. You earned them, and the best way to protect them is to stay informed, keep good records, and never let anyone convince you that hiding clean money is smarter than documenting it. If you have a situation you are unsure about, a large deposit coming up, a family gift, money you are moving between accounts, describe it in the comments. Comments are read, and responses are provided where possible. You may find that your question is exactly what someone else needed answered. This is general information only and is not legal or financial advice. For guidance specific to your situation, please consult a licensed CPA, tax attorney, or financial advisor.